You know how every once in a while you have a trading day, a trading session where you realize that trading is the dumbest thing you can possibly do. The markets are rigged and the only option to really do is to take your computer, to take your monitor, bash it into a million pieces, because that's the only thing that's really going to allow you to hold on to that final tether to reality. Well, it just so turns out that today, Monday, November the 17th, was one of those days for me. Not only was it a horrible trading session for the markets in general, but it was a horrible trading session for your boy, which makes me feel like a cool Gen Z kid, because all I wanted to do all day was say FML. I wanted to stand on this chair, I wanted to go to the top of my building and scream from the top of my lungs, my life. Before you nod your head in agreement and say,
hey man, some days are good, some days are bad. The market has a lot of variance, and that's just something we have to get used to.
I totally understand that. Like you said, that is just the math of the market. However, today, the cold hard facts do not point to the market as being the issue. They point to the guy in the mirror being the issue. I swear, I need to call up my mom, and I already have, and she's just not really giving me the truth here, but I swear she must have been popping Tylenol like no other, because honestly, every time I look in the mirror, I realize that I am in fact the biggest issue in my own life. So in this video, I want to share the fact that I am the biggest dip to walk this planet Earth, and ideally some of you watching can learn from my stupid mistakes to ideally sidestep them yourselves in the future and really not have to deal with the problems that I am currently dealing with. So really, to get rocking, let me add a little bit of context to this video. When the market officially closed on the day, Dow closes down more than 550 points, dragged down by both Nvidia and the entire tech sector. The overall market, the S&P 500, dropping 0.9%. We are just below the 50 MA. That's not good. If we recover, awesome. But you should also know there is an upside gap fill. However, if we take out this low from Friday, November the 7th, probably not going to be bueno. Similar situation for the NASDAQ. We're just below the 50 MA. Could easily recover. Obviously, we have the upside gap fill, but like the S&P 500, if we crack this recent low, probably not going to be a good situation. And what's looking uniquely weak is Bitcoin. Bitcoin, lower highs, lower lows, literally as I'm filming this, having a technical breakdown right now. So maybe dip buyers come in across the board on all of this, or maybe it's going to stay bloodbath red like the entire heat map of the S&P 500. But I shouldn't be picking on the S&P 500 by itself, because in fact, my own accounts were bloodbath red. Check this out, minus 3.2K on all 15 accounts, meaning I lost about $50,000 today. Now, I know those of you who are my nice viewers and like to give me constructive criticism, you're going to point out the fact, but Matt, you're still up about $250,000, whatever, that's a misstep, that's fine. I want you to know that at one point today, my realized P&L was $17,000 in the red, as in all of my accounts today started off at $70,000. And then through my dumb trading, like I said, way too much Tylenol, they got all the way down to 53. And it was only because of, I assume, intervention from the market gods themselves that I was able to get a little bit of a rebound all the way back up to only having a loss of $50,000. Folks, today I was this far away from completely blowing out my accounts, and I can't blame the trade copier, I can't blame the markets, I can only blame myself. So not only is it embarrassing that in my attempt to be as transparent as I possibly can be, so I have to share all my wins and losses with you. So yeah, it's embarrassing. It's fun when you're doing well and I get to share that with you, but it's extra embarrassing when I literally just today posted a video of how Apex approved $30,000 and I thought I was going to go on this sun run of a situation, and all of a sudden every 8 days I'd be making a new video for you guys, 30K, 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 30K. I thought like I finally reascended the mountaintop, but no, like I said, I was a little bit away from blowing out. So hey, feel free to watch this video because it might be the only approved video I'm making in a while. I'll make sure it's linked below, but it basically covers how I finally got approved for $30,000 after getting denied for $30,000, adding to this whole situation that I thought after making this approved, my newest video would have to be like, Yep, lost it all. I'm a dumbass. So I think you understand the scene that I'm painting for you. Not only am I incredibly lucky to have not lost my accounts, in a general sense, I'm obviously just pretty stupid. Now for here, the useful part of this video, I want to explain exactly what I did and really get into kind of the mentality and the psychology of trading and understand really how I was able to get out of that rut intraday during the trading session. I promise you, if you've ever gone tilted, if you've ever spiraled out, this is the video you want to watch, because I did that today, and I want to explain not only how I spiraled, but how I was able to get out of the spiral and at least mitigate some of the damages. So really quickly, just to kick off how the intraday action went, we opened up, things were fine, we popped up a little bit, we dropped a little bit, we popped, and then we pretty much vomited into close and had a little bit of a relief rally into close. That is true on the SPY and the NASDAQ. If you look at the VIX, volatility picked up, and as I've already alluded to, Bitcoin is getting its teeth kicked in. Here's a look at the 10-minute action for NQ, which is the futures contract for the NASDAQ, and that's what I was trading on all these accounts over here. And you could see from all the markers that your boy spazzed out a little bit, and I can pinpoint the point it all exactly went wrong. It was around 12:39 this morning. Now, if you happen to watch the live show, shameless plug, Monday to Friday, 9 to 11, you can watch me degenerately trade my own accounts. Things were actually pretty good. I was bouncing around a little green, a little red, a little bit break even. And when I got off of the show, basically I kept dollar cost averaging in off of VWAP because I saw a bit of a recovery. And at this point, it didn't feel like I really lost. I was like, oh, look at this. We're recovering. Prices on top of all the EMAs. We took out the recent high. This was an equal low. Okay, things are looking good, and VWAP was roughly in that region. So I kept adding, and I was basically using VWAP and this recent low as my risk. I was trading too many contracts, but I thought that I had my risk in control, that if we got a bounce, great, I'd be massively green. That would be the day. So I had this strong bullish bias, and in reality, my bias was just the fact that I thought VIX was going to get crushed. And the idea was, okay, maybe I'm a little bit tilted. All these trades kind of netted out, and it was right in this zone. In fact, we could zoom in on it just to make it that much more painful, that I was able to scale out of one. That is kind of that pink magenta scale right there. You can see my last ad scaled in, then scaled out because I decided I had too many contracts. Even got at another one for break even. So locked in a little profit, break even. And at that point, I think I still had about 3 or 4 contracts. Like I said, I was playing way too big. I generally don't like to go above 2. And I thought to myself, hey, Matt, you're going to be very disciplined and you're going to use this recent swing low as your risk. And the second it hits, just get out. Well, would you be surprised to find out that I did not get out? My fill was around 45, 46. I was risking 22, so I was risking about 20, 25 points. I'd be down about a net 1,000 on the day. For accounts that were up 70K, that's super manageable. But you're going to notice that there is no exit there. In fact, I didn't get out until 977 when I should have been out at 123. That is the dumbest thing ever. And then guess what? I decided to double down and make it worse, where then I just got blown out of that. So at this point, even though this is a bad loss of 3.2K each, 50K in total, at one point, they were all down $17,000. So not only is that itself pretty horrible, but let me express how stupid this is to you. Even though we pumped, it failed. We cracked this low right here around 1210. So clouds back red. In terms of overall generic momentum, we're at the 50 EMA, we're at the 50 EMA intraday. We're cracking. All right, so price action, that's not trending well. If you look at momentum, like I said, we're already back on the south side of the EMA cloud, and then options flow, it did nothing but die pretty much all day. So no matter how you cut it up, I was fighting trend. So not only was I in the situation of not honoring my own risk, but I was clearly going against the trend, and I'm a trend following trader. So like you can start to understand the lunacy, and then I really just spiraled out and started to add more, and that's how the loss got so incredibly out of control. So basically, that's why things got so incredibly bad. And I've already said this before, but maybe this is the first time that you've heard me say this. There is a special place in purgatory. There's a special place in hell for all of our mindsets when you know what you should be doing and then you just don't do it. I knew I shouldn't have been adding to my position. Didn't hurt me that bad, or at least I didn't think so. I knew that if it broke down and didn't hold VWAP, I should be getting out. I knew I was attempting to play what I thought was a new trend and even give those odds a 50-50 chance, but the trend did not go that way, so why not just cut? And if I wanted to, I could have flipped the other way and I would have made a ton of money. Instead, I rode it and rode it and rode it, made it worse, rode that, and then made even that worse. Like I said, it is a specific type of mental torment when you know exactly what you should be doing and you just don't do it. It's almost a state of paralysis where you're like, wow, this is getting really bad, and you just can't get yourself out. So clearly, that's why things got so bad. And then the question is, well, how did I go from a loss of 17 to only a loss of 3? And what in the world is going on in the chart with all these trades? Well, step one, I looked at the accounts and I realized, okay, if these go down, that's going to be more embarrassing. Yes, it is embarrassing for me to tell you I lost money. It was going to be embarrassing to say I lost 17K per account. No matter what, a loss is embarrassing, especially when you're in the position I'm in. But what's more embarrassing is if I had to be honest about not only losing money, but losing the accounts. So the first thing I thought was, yes, this loss is bad, but what's worse than bad is the fact of losing accounts and restarting. So I knew I had to stop the bleeding. When I saw it, the accounts were around 54K, and I basically just hit the eject button somewhere around 2 or something like that. A little bit in here, a little bit in there. But it was pretty much the start of the afternoon of where I was like, okay, let's just get out and reestablish what's going on. So I said, okay, let's reestablish, let's get on the right side of the trend. Mag 7 Delta Flow selling off. S&P 500 selling off. Looking at the trend of the day, obviously we had equal highs. We cracked these lows. That is trending down. Looking at the momentum of the day, trending down. So by the time I looked at price structure, price momentum, and options flow on an intraday basis, especially evident at 2 p.m., or technically 1:50, everything was down. So I knew I needed to get on the short side. And then I employed a new technique that I explain a little bit in this update video right here in the approved, but just to give it a better explanation is what I did, and I know it looks like a lot of trades. Here's what I did, was I knew I didn't have much buffer to deal with. So basically, one by one, I would add in a contract when I thought there was a good risk reward opportunity. And right away, a little bit in my favor, 3 points, 5 points, 10 points, I just set that stop to break even and I forgot about it. And then a little bit later, if I saw another good entry that I thought was with trend, once again, I took a short position, a little bit in my favor, set the stop to break even. So what I was doing was basically only taking trades with minimal risk, and then I would remove the risk completely by moving that stop to break even. As you can see in this technique, a lot of them got stopped out for break even because when you're moving it that aggressively, it's so close. And with the volatility of the day, it's no surprise that, yeah, that's how it's going to go. So a lot of these were stop outs for break even, but I went from one contract, stop out, 2 contracts, stop out. So yes, many of them got stopped out, but every so often I had one contract that we'll call sticky, as in the stop was to break even, price never returned. So I was able to ride it all the way down. And then it was around 315 where, I saw some bottoming, and it was especially around 320, 330 where I was like, that's a higher low. So I did the same technique, but to the upside. So once again, there's a lot of trades, but that's just because so many of them were knocked out for break even, and you only need a couple. And before you know it, you're riding 4 or 5 contracts in the right direction with no risk. Because once again, all your stops are at break even. That's exactly how I was able to basically not completely dig myself out of a hole, but instead of being down 17K per account, I was only down 3.2. So basically a 14K turnaround by only taking on minimal risk, which is obviously the polar opposite of what I was doing in the morning where things broke down and I was just like, nope, it's going to come back. It's going to come back. It's going to come back. So basically I just did the polar opposite thing. Instead of taking on wide risk and letting it go loosey goosey, basically after this fall here around 2, I just had absurdly tight risk. And yes, many were stopped out for break even, but I only needed a couple that were quote unquote sticky to continue riding it down and down and down. And that's exactly why the pain wasn't that bad. I hope that explanation of the technique makes sense. If it doesn't, feel free to watch this most recent video. It doesn't perfectly explain it because this was kind of something I generated throughout the day today, but it does get through the main point. So like I said, I will pin this video of how I got the last $30,000 in that trading technique. It'll be in the description below. Now, for those of you who are like, okay, hey man, I'm happy you made some money back, but what's going on with the overall market? You pointed out how it's almost breaking down. You pointed out right here how both the SPX and NDX, they are on the edge, and you are 100% right. But remember, no one in this world can possibly predict, are we about to bounce? Are we about to break? All I can tell you is we are at a pivotal level. This will either be a great short, risking the recent high, or this will be a great long, risking the recent low. Do not try to predict. Wait for the events that are going to happen that cause this to trend one way or the other. So coming up Wednesday, we have the FOMC meeting minutes in the afternoon. That morning, because we're in an OPEX week, volatility will be expiring. And then later on that day, we're going to be hearing from NVIDIA. So the party really starts this Wednesday. So most likely, if I had to guess, today, not so good, but does it matter to me? No. Tomorrow, probably the same situation. I don't know if it'll be a recovery day, a sell-off day, but it doesn't matter because we haven't gotten the main event. The main event starts Wednesday. Wednesday morning, you have VIX contracts expiring. Afternoon, FOMC meeting minutes. Wednesday after the market closes. And also let me know in a comment below if you want me to stream the NVIDIA earnings. More than happy to do it. But then NVIDIA is going to be reporting. After that, on Thursday, we're going to be getting jobs numbers. Friday is OPEX. And on top of that, we're getting manufacturing numbers. So really, of this week, Monday and Tuesday are kind of just stall out days. So right now, even though things look dire, it doesn't matter to me because I'm waiting to react rather than predict. And as I showed you, even for my intraday trading, as long as you can get on the right side of the trend and quickly admit if you're on the wrong side of the trend, well, that's how you can get outsized gains with only taking on minimal risk. Like I said, if you have questions about NVIDIA's earnings and want me to stream it, if you have questions about Apex and my approval, my trades today, or what in the heck is going on in the market, let me know in the comment below and I'll do my best to get back to all of you. I just wanted to be, I guess, transparent and let you know that even though I've been on a hot streak, it has officially come to an end. Your boy got a little bit beat up. It could have been way worse. And hopefully I can just shake this off and recover to some higher quality trading as early as tomorrow. That's what I have for you. I appreciate all the good vibes. I'll catch you in the next one. Peace.